The fact that we're here, the fact that we're talking about digital assets, the fact that this is the greatest migration of talent I've ever seen in my life. And I've seen a bunch of them, right? I got white hair to prove it. I've been around a long time. And the internet movement was amazing. The kids coming into the internet were unbelievable. In the mobile net, unbelievable. This is better.
Hey, welcome back everybody to Altcoin Daily. My name's Austin, joined with my twin brother Aaron, and the man, the legend, Mark Yusko, founder of Morgan Creek Capital Management and co-founder of Morgan Creek Digital. Thanks for joining us.
Hey, great to be here with y'all, and looking forward to the conversation.
Absolutely. And we see you all the time for years now on CNBC talking about big picture macro stuff, Bitcoin, cryptocurrency. So just for our audience, for maybe some of the folks that are new, what's your background and how'd you find crypto?
Yeah, so I am a self-proclaimed or self-described OMG, which stands for old macro guy. So old, clearly white hair, and a macro guy by training. I mean, actually, I grew up, I say, in your background reminds me of home. I grew up in Seattle on the left coast and studied, of all things, pre-med at Notre Dame in the Midwest near Ohio, near you guys. And although you beat up on us this year in Ohio State, I don't know if you're Ohio State fans or not, but
you're welcome.
Anyway, but long story short, I ended up doing investments, then got into the endowment world, worked at my alma mater at Notre Dame, and then North Carolina, where I am today, Chapel Hill, and ran that from 98 to 04, and then launched what was called an OCIO firm, an outsourced CIO firm back in 04. And the short version of a very long tail, although I don't do short, but I'll try. 2013, I got handed Bitcoin and crypto on a silver platter, but I was dumb. And my joke, which is not actually a joke, I was not running drugs on Silk Road. I was not a cryptography student. And my friend Dan Moorhead said, hey, I'm shutting down my hedge fund, sending back the money, and I'm going to spend the rest of my career in Bitcoin and blockchain. And like Bitcoin, I mean, I've heard of it, but whatever. And as soon as he said infrastructure, picks and shovels, like gold rush, I'm like, yeah, I like that. So put money in that fund, and that fund's up a lot. I mean, it's got, FTX and others like up 17 times, but his Bitcoin fund's up 350 times. So should have put the money in the Bitcoin fund, but I didn't. In fact, true story. If you read the book Bitcoin Billionaires, which anyone listening should, it's a great book, actually an easy read. Ben Mesrick, great writer, all about the twins. I was introduced to Bitcoin the same month as the twins. They're multi-billionaires and I'm not. And why? Well, because they were partying in Ibiza with Charlie and the guys, and I wasn't. And so they got it faster. And I was skeptical. I'm old. I was set. I was a macro guy. I was like, hey, stocks and bonds and venture capital. And I didn't get it. But I did the work, from 13 to 14, first quarter 14. I wrote to my clients one paragraph in a 40-page letter. Yeah, I think this is interesting. I think you should put 25 basis points, 0.5%. And I got hate, y'all. I mean, I got hate. Like, you're an idiot. Don't talk about this. We will fire you. Go back and do your job. I'm like, wow, that is like really, that's a lot. And the crazy thing is the next paragraph was about Saudi stocks, which I will argue is way more controversial today than Bitcoin, after the Khashoggi thing. So, but no one cared about that. They were just like, don't talk about Bitcoin. And the price was $500. It went to 178 by September of that year. And I was like, yeah, they were right. And then bang, 6 weeks later, it was $1,000. I'm like, nope, they're not right. They're not right. And so, I got to do more work. So I did more work. First quarter 15, I'm like getting ready. And my son graduating from Notre Dame, I said one word. You guys are too young to remember this movie called The Graduate. And this guy said, one word, plastics. Just go into plastics. I was like, one word, blockchain. So he wanted to live in San Francisco. His whole life growing up, ever since he saw this thing called How It Works or How Things Work on the internet. He's like, I want to be in tech. That's what I want to do. So I said, go talk to Dan, get a job at Coinbase. Goes out, talks to Coinbase. Like, I don't know, Dad, maybe this would be a big deal. I'm just going to go to KPMG. Safe, gets me to San Francisco, did it. I said, you're going to hate it, which he did, quit after 9 months with no job. Like, I guess that's a millennial thing. You quit without a job. Like, no, you get another job before you quit. No. So he quit because he hated it. Now, love my son, really proud of him. He ended up working at Snowflake, but he called me and he said, all right, Dad, when Coinbase went public, he's like, all right, Dad, you were right, but you're not as smart as you think you are. I'm like, oh, do tell. I told you to go to work at Coinbase. He's like, yeah, but you didn't lever up the house and put all in Bitcoin. I'm like, you little shit. Yeah, that's true. I did not. So finally in 17, kind of embraced it. Again, didn't go all in, but embraced it. Decided I was going to start a new business called Morgan Creek Digital. So Morgan Creek Digital sits under Morgan Creek Capital. And I met this young guy, Pomp, who everybody knows. And I was going to do a fund of funds. I was going to allocate capital to other managers, which I had always done. And I was going to, hire Dan at Pantera, and I was going to hire Blockchain Capital guys, the other twins at Blockchain Capital. And he's like, no, we're going to be the best venture capital fund. I'm like, Pump, come on, dude. How are we going to be the best venture capital? We haven't done venture capital. He says, we're just going to be the best. I'm like, okay, fine. So we did. We started a little fund, and we just got so lucky. We met this visionary CIO. She immediately got it. She gave us some money. Her compatriot also gave us some money from Fairfax County in Virginia. And back in 2018, that was bold. I mean, it was bold for pension funds to give an upstart venture capitalist in crypto money. But so we started investing, and it was literally like shooting fish in the proverbial barrel. I mean, remember, this was 2018, crypto winter. I mean, we launched June of 2018 into this kind of week. Remember when it was 6,000 and we plunged to 3,200? Like, Jesus, what did we do? But everything we touched turned to gold, right? We invested in companies like Coinbase and companies like Figure, and we bought Bitcoin, and because 70% of what we do goes into equity of businesses, 30% goes into digital coins, protocols. And I told you I don't do short well, but let me finish the story. So we raised the first fund, put it to work. It's done great. Fine. Raised second fund in 2020, started to deploy it, and we made a mistake. So in the first fund, we did 29 deals, and we made 4 crypto investments: Bitcoin, Ethereum, Solana, and the Graph. Those last 2 came from Kyle Samani. And they've been great. I mean, we made a ton of money in Solana. I mean, like crazy amounts of money. But then in fund 2, Pomp and Jason Williams, the other partner, and I'm not throwing them under the bus because I love them. I talk to them every Monday. They had gone maxi. They've come back, from being pure maxi, but they had gone maxi in 2020. And so I had this buddy out in San Francisco who introduced me to this guy, Matt Moravian, who might be one of the best DeFi analysts I've ever met. He's a computer scientist guy from Berkeley. Long story short, he handed me on a platter Aave, Compound, Synthetics, Uniswap, Sushi, like day one. And I'm like, guys, we should do this. And I'm like, nope, shitcoins. Nope, shitcoins. We can't do any of that stuff. Bitcoin only. That was bad. We probably should have done some of those, but we didn't. Fund 3, we went back to doing a little bit of everything. So now, and it's really funny because I'll leave you with this last thought. So at night, I'll go surf on spaces. And it's really funny because I'll go to a Bitcoin space and like, get out of here, you shitcoiner. I'm like, what are you talking about? I own more Bitcoin than you. Can't you read my sign? And they're like, no, you own Ethereum, you own Solana. I'm like, yeah, and I made a lot of money. So why is that a bad thing? And like, because you should own Bitcoin only. I'm like, okay. And then they're like, and not your keys, not your coins. You have stuff at Coinbase. I'm like, yes, I do. Why is that bad? I'm like, well, because not your keys, not your coins. I'm like, but look, if y'all think that Bitcoin is only about putting it on a ledger, great company, we're owners. Okay. Talked to Pascal this morning. Okay. If you think it's about putting it on a ledger and burying it in the backyard, don't need it. Got that. It's called gold. Okay, that is not an advance. If we're going to deposit it, lend it, use it, borrow it, invest it, hypothecate it, and I know Caitlin, and we're investors with her too, doesn't like rehypothecation. I don't like 20 times or 40 times like Lehman or Credit Suisse type rehypothecation, but fractional reserve banking is not evil. In fact, name a country with a bad fractional reserve banking system that's a good place to live. I will wait, and we'll be here a long time. You won't find one. So that is not the evil part. So rehypothecation is not evil, and putting your money in BlockFi or some other place that lends your assets out, as long as it's fully collateralized, is not evil. When it gets uncollateralized, like Celsius and like Luna and Terra, okay, that's bad. But that's bad management. That's not a bad idea. That's bad management. There's a difference. I told you I don't do short. So what was the question again? No, I'm just kidding.
No, I loved it. Your background, how you got into crypto. And I do want to delve deeper, both of us do, on Bitcoin versus DeFi and going into 2023. But before that, could we just set the stage on your thoughts on the macro environment right now? Like, are we in trouble? Is the Fed going to tighten us to nothing, to collapse?
Hold on 1 second. I just got a text that my dog escaped. And I just got a text that they found her.
No problem.
Oh, congrats. That's great.
Now, she always goes the same place. And just, anyway, she climbs the fence. She climbs the freaking fence. Well, you have fences to keep dogs in, and she's figured out how to climb the fence. She's like a monkey dog. Anyway, macro. So here's the problem. And I don't want to go too far. So it's funny. You know, Dan Tapiero, if you don't, you should have him on the show. Great. Another OMG, old macro guy. So there's myself, Dan Moorhead, Dan Tapiero, Nova Gratz, John Burbank, all of us kind of in our 50s. We came to this kind of independently. But DTAP and I did a thing at DAS, the Digital Asset Summit in New York. And Mike Ippolito said, final question, quick answer, which is bad because I don't do quick. He said, quick answer, what are your thoughts on the near term? I said, well, in order to understand the near term, you got to understand the macro. So it means you got to go back to 1840. And Dan was just like lost. He's like, Mark, he asked you about next month, not 1840. I'm like, no, 1840 is really important. So there's a 90-year cycle in macro. And why is it 90 years? Well, it's because it takes a generation to forget what not to do. So every generation forgets that you shouldn't do stupid stuff. And stupid stuff has to do with trade barriers and deglobalization, right? Adam Smith was right. Specialization is comparative advantage is good. That's how you grow. And globalization is good, not bad. And the second thing is that you don't tighten into economic weakness. So in 1840, we had not renewed the Second National Bank Charter because for political reasons. And so we had a free banking era. And we had a garden variety recession. And that free banking era was very regional. It wasn't national. It wasn't global. And so there was this deglobalization, nationalization. And so every state was on their own. And you had companies issuing money, like ridiculous. Like you'd have a company in Texas issuing their own currency. Stupid. But those banks, when you had a little recession, freaked out and started to contract liquidity and turned a garden variety recession into the Depression. So then 90 years later, you got the roaring 20s, everything's great, and we're great. And then we had the stock market crash. And then we make two gigantic policy errors, Smoot and Hawley, the two dumbest guys in the history of Congress, which is really a big statement because there's been a lot of dumb people in Congress, including right now. But they're not all, well, are they all dumb? I don't know. Maybe they are. Because who would take that job? What smart person would actually take that job? I mean, there are some good intentioned people. I shouldn't over dramatize, but it's just too hard. You got to put up with too much garbage to become a congressman or senator. So Smoot and Hawley put up tariffs in a time when we were trying to rebuild after World War I. Bad plan. Second thing, the Fed tightened into a garden variety recession and turned it into the Great Depression. So the worst year in the history of markets was 1931. Hold that thought. So here we are today. So what do? We do tariffs. Bad plan. We're 90 years later. Two, we locked down the whole world because of the flu. Like literally, we turned the flu into this big scary thing and we lock people in their homes. Well, what does that do? Well, it disrupts globalization. And then we all get on this nationalism and populism campaign, and that further accelerates the downward movement. So global economies are teetering. So then what do? We start raising rates. No. We've seen this movie before. It ends badly. And so now we have the second worst year in the markets other than 1931 for exactly the same reasons, because we're in this 90-year cycle and we are on the verge of turning a recession into a depression. Oh, no, Mark, everything's cool, right? Sunday night, the world was going to end. Credit Suisse on the verge of bankruptcy, Deutsche Bank right behind them. Fed, I love this, what do they call them? The Federal Stability Committee, FSOC, whatever it stands for, the Federal Committee on Financial Stability. It's basically the plunge protection team. They were created in 1988 after the plunge in 87. It's the head of the Treasury, the head of the Federal Reserve, the head of the four biggest banks, JP Morgan, Bank of America, et cetera. And they meet every Sunday night. And that's why every big announcement happens on Sunday nights, right? Bear Stearns, back in the day, Lehman, all of it happens on Sunday nights because the banks divide up all the spoils amongst themselves. So what did they do this Sunday? They said, all right, emergency meeting of the Fed on Monday morning. So yesterday morning, there's an emergency meeting. We get no information, but everybody just assumes, oh, that means the Fed's going to print. So what happens? Short squeeze. So we get this massive short squeeze. Markets are up 6%, Bitcoin's up, altcoins are up, everything's up. Everybody's like, oh, yay, they're going to print more money. Fucking kidding me? You're happy that they're going to devalue the currency more? Really? I mean, and this is the problem with what I call the cult of Kelton. So Stephanie Kelton, this famous, infamous, idiotic economist who's convinced the current administration and the last administration too, that you can print as much money as you want and nothing bad happens. Okay, y'all, on what planet has that ever worked? There is none, right? Okay, there's been lots of paper currencies, 775 of them in the history of the world. 3/4 of them no longer exist for precisely that. The Romans thought they could print money until the cows come home. The empire fell. The Ottomans thought they could print currency and their empire fell. The Brits thought they could print currency and their empire fell. Okay? The Americans think they can print currency. Our empire is falling. It's the same tired story, right? I have in my office in the other room a 100 trillion. So let that sink in. 100 trillion. Remember, 1 trillion is $1 a second for 31,710 years. One. This is 100 of those babies. $100 trillion Zimbabwe dollar bill. Wouldn't buy a loaf of bread. $100 trillion wouldn't buy a loaf of bread. That's hyperinflation. Same thing with, Deutschmarks in terms of Reichmark. And now what we're seeing is this devaluation of currencies all over the world. And everybody's like, but it's not working, right? Bitcoin didn't do what it was supposed to do. It's down. I'm like, oh, no. Let's go back. Let's go back to pre-pandemic. Price of Bitcoin was $10,000. The government of the United States printed half of the money in the history of our republic. We've been around 246 years. They printed half of all the dollars. And you know why it's called the dollar, by the way? Because we took it from the Dutch, because the Rothschilds created the first central bank and it was called the dollar. So we borrowed that, as we've done all bad ideas from the Rothschilds, because then they moved to the Bank of England and the Bank of England became the Fed, and the Fed, perpetuates the same myth of inflation. It's supposed to be good for us. Inflation is not good for anybody except rich people. That's who it's good for. And so the Fed created this pool of money. So what should have happened to the price of Bitcoin? Should have doubled. If you increase the money supply by 50%, it should devalue by half. Okay. I mean, if you double the supply, it should devalue by half, and the price of Bitcoin should go up. Went from 10 to 20. No, but market went to 70 and then to 30 and then to 70 and then to, whatever it was, 17, and now it's back to 20. But you're missing the point. That's the price. That's not the value. The value's done exactly what it should have done. Now, The price is just what two people agreed to buy or sell something for. That's not the value. And so now everyone's cheering again that the Fed's going to print some more money. Well, when they didn't say they would, in fact, all they did is say we're going to meet. They've threatened to raise interest rates again and contract liquidity. We actually had negative money supply growth for the first time in 43 years. So that is a very long answer about macro, but macro is really important right now because macro drives everything, right? In terms of it drives, monetary exchange, drives interest rates, it drives currency. So if you look around the world, currencies have been demolished, right? Emerging market currencies, emerging market stocks, they're all down. Why? Because as the Fed raised rates, all these countries had issued bonds in dollars, and so they have to raise rates to defend their currency, which smashes their economic growth and smashes profits and smashes stocks. So we're basically creating impoverishment. And the problem with this is it's what's called the dictator playbook. The dictator playbook is this insidious thing. You get all your friends and you push them up to the top. So you replace capitalism with cronyism. So now all your friends are at the top and you hand out deals and assets and all the people at the top own all the assets, right? Remember, 49% of people in America don't own stock. It's a crazy stat, right? They don't own a house because they rent. They don't own their car because they rent. I mean, you own it, but it's got an 8-year loan. That's a rental. So that psychology then says, okay, if everyone at the top has assets, what do we want? Well, we want those to go up. What do? We devalue the currency. So we talk about inflation. There's no inflation. We have currency devaluation. The house I'm sitting in right here in Chapel Hill, in theory, according to Zillow, went up 40% in the last 12 months. My house did not grow. It did not get more efficient. It did not get larger. It didn't get better. In fact, I had to put money into it, right, to keep it from depreciating. So why did it go up 40%? It didn't. The money that we need to buy it went down. And that's the difference. Inflation is caused when there's excess demand for limited supply, like if there's not enough oil to go around. Okay, well, that's caused by the Saudis, restricting supply. So now the president is pumping it out of the SPR to buy votes. So that's the second part of the dictator playbook. You say, well, how do dictators stay in power? If they're so bad and they're so mean and they put all the money with all their friends, why do people vote for them? Free stuff. You give them free electricity. You give them free money. You give them stimmy checks. You give them student loan debt forgiveness. That's how you buy votes. And that's how dictators stay in power. So the fact that all the countries are now following the same playbook makes me very nervous about fiat, but actually makes me very positive about crypto.
Based on everything you just said, and so we have the inflation, the currency devaluation, the Fed continuing to tighten, just the current, everything that's happening in the world, Putin waging war, euro and pound dropping in value, S&P closes 3 red quarters in a row, equity indices broke their June lows, comparisons to the 2008 financial crisis. Have we, in summation of the macro climate, have we ever seen an economy like this in history? And how do you think investors should be playing it?
Amazing summary. So awesome. And so yes, but no one remembers it, right? Because the only time we've seen it is in 1930 and 1840 and 1750. And people just don't remember that because they don't study history. And as Churchill said, the further back you look, the further forward you can see. So what people always do is, like, people say, oh, this is like the 70s. This is nothing like the 70s. I mean, I lived in the 70s. Hair was bad, beards were bad, clothes were bad. Google the picture of the original Microsoft 11. Just Google that picture. Now, they're multi-billionaires and I'm not, so I shouldn't make fun of them, but we looked bad in the 70s. So it's not the 70s. What's really not the 70s is people like me are not 25 years old, right? The reason the 70s and the 80s were so awesome is because the boomers were reaching 35 to 55, the peak earning savings family years. And that is expansionary. Today, every day, 10,000 of us turn 65. Every single day, 10,000 boomers turn 65. Turns out 65 to 85-year-old people are not productive and they don't spend a lot. Perfectly nice people, love them, love my parents. Okay, great. I'll be one in 6 years, but we're not productive, that age cohort. Okay, same thing with 25 to 45. 25 to 45, perfectly nice people, but not highly productive, right? The way we measure productivity. 45 to 65-year-olds are really productive because they've educated themselves, they trained themselves, they own businesses. Now, all the good stuff is created by the young people, 20-year-olds. So if you look at the technological evolution that happens, including crypto, right? 54 was the mainframe, started by a bunch of 20-year-olds. 68 was the microchip, 20-year-olds. 82 personal computer, 20-year-olds. 96 the internet, 20-year-olds. You know, Mark Andreessen, Sergey and Larry, et cetera. Then you got 2010, the mobile net, right? Now, Jobs is older than 20, but the guys who actually designed this were in their 20s. But Jobs was the genius. Jobs was a clear, like, otherworldly genius. And if people don't watch his old videos, you just should. I mean, the guy is just amazing. And also watch the video of Simon Sinek on why versus what. Best 11 minutes you'll spend. Actually, that is my dog. I'll be right back.
No problem.
Sorry, I know it's a live show. The rogue dog has returned, and I'm going to have to apologize for my neighbor.
No worries.
No problem. Can you hold him up, or
Pardon?
you have the
Pat,
dog with you?
Come here. Come on. Come on. Come on.
Yes.
Hi. Say hi. Oh my God, she's all wet. Okay. Yeah. All right, we'll fix that. Where was I talking about?
We were talking about how, have we ever seen an economy like this?
Have we seen this? Yeah.
And how should investors be playing it?
Yeah. So I was going through the technological evolution. So 2010 was the mobile net, right? And 2024 is the truth net. And the truth net is where we replace trust with truth. So for 800 years, again, have we seen this before? For 800 years, we've had this 90-year cycle dictated by banks, right? The banks came along back in the 1300s and said, the Medicis, wait a second, Mark wants to transfer Austin lend him some money. So Mark writes down in his ledger, all right, Austin borrowed $100. So he comes back with 110 to pay me back. I'm like, no, Austin, you owe me 220. I only borrowed 100. Says right here, you had to trust me and I'm a bad guy. So I changed it from 100 to 200. So the Medicis came along and said, no, Austin keep a ledger, Mark keep a ledger, and we, the benevolent Medicis, for a small fee, will decide which number's right. So dual entry accounting. And that made for trillions of dollars of fees for the trusted third parties, banks, brokers, middle people. Well, Satoshi Nakamoto, whoever he, she, they are, came along and said, well, wait a second. We could have computers be that truth instead of trust. We could actually know exactly how much value Mark transferred to Austin, never have to quibble about it. It's immutable, permanent, encrypted, and that's a better system. So as we migrate all things of value, every stock, every bond, every currency, every commodity, every piece of art, every collectible car, every case of fine wine, every private business, everything that can be titled will be a line item, a token on a ledger. And that's all we're talking about, right? It's big old ledger, permanent, immutable, and tokens. All of it will be tokenized. All of it will then be transferable and auditable and will have truth. So now we think about why then is the economy faltering? Well, because the economy is transitioning to this new, but it's still stuck in the old. We're still in the TradFi, centralized, old school world where the bankers, right, male, pale, and stale, behind closed doors, make all the decisions. And you think about, why should a bunch of Fed governors determine interest rates? Why shouldn't the market determine interest rates? Why should a bunch of Congress people determine minimum wage? Why shouldn't the market determine wages or minimum salaries or any price controls of anything? are bad. They've always been bad. The market works better. And so we're in this weird situation where the traditional world, the incumbents, are fighting really hard to hold on to what they got because they like being rich. And you have the disruptors, young people, innovators, entrepreneurs that are pushing us forward in these new ways. And I said, the reason it's always young people is one, old people are tired, but I'm just kidding around. Mostly it's because young people don't know what they don't know. And before it was politically incorrect to talk about Bill Cosby, he was a comedian when I was growing up, and he was actually funny back then and not a bad guy. But he had this record album, vinyl thing that you spin on a thing. I know you guys don't know what I'm talking about, but vinyl disc. And you'd play it, and he would talk about this kid. And he said he'd ride his bike anywhere. He'd like ride over the top of the swing set and across the top of the fence that my dog just jumped over. And he'd do 360 circles, 6 inches off the ground, never fell. You know the first time he fell? When someone told him about gravity. He didn't know what he didn't know. So the same thing is you can't make a digital asset non-duplicable. It's impossible. People tried for years. I mean, Tim May in 1988 wrote the Crypto Anarchist Manifesto. He predicted everything that was going to happen in the digital age. It's only like 2 pages long. He predicted everything that was going to happen, but nothing happened for 20 years because he was an anarchist. He sat up in the hills by himself. He had no friends. So anarchism is probably not the way we want to go. So Satoshi comes along and says, wait a minute, I solved this problem. I can actually make a digital asset non-duplicable. Because in the old days, I had that vinyl record album and I lent it to my friend, Lucky Rodriguez, in college, and he never gave it back. And I'm still pissed, obviously. So Lucky, if you're listening, I want the freaking Foreigner album back, okay? So then MP3s came along and you had electronic. So now I don't have to give Lucky the album. I can make him a copy of Hot Blooded, and I can send it to him. And he doesn't care. Original copy, no big deal. Who cares? The music industry cares a lot because they want Lucky to buy his own copy, as do I. And so what do? Okay. In a hierarchical world, hierarchy exists to leverage the brain at the top. It's what all businesses have done for millennia. And it's why you pay CEOs the most, and it's why everybody else works for the man. But the problem with that is that might not be the smartest person, and the people underneath might have some value to add. But bottom line is that's how hierarchies work. One CEO, one home office, one server, centralized. So Napster comes along, says, you guys can share files all you want. So what does the music industry do? They pay the government to arrest the CEO and blow up the server. Like literally took a sledgehammer, beat up the server. End of Napster. So now what do? We all have digital music that we all have to pay for, and we can not really share. And the best part about it is because of blockchain, the writers, the creators can actually get paid. So as we transition from Web 2 to Web 3, I'll give you one funny thing. I don't know if you guys have seen the TikTok thing, Crypto Boy.
So, yeah, of course.
I actually kind of like it. I think it's catchy, but I liked Avril Lavigne kind of, but okay, so bad on me. But I thought it was a catchy tune. And the mix up with the guy, Ginny, right? The guy at the end, he's awesome. The guy who's rapping on the dryer, he's awesome. The woman that she does harmony with, actually, she's really good. I actually like the whole thing. But I wanted to do an open verse challenge because she's saying, look, talk about your NFTs one more time. We're not getting together. Okay, fine. You don't want to hear about NFTs. I don't care about your crypto. Okay. And I wanted to do the open verse challenge, right? My daughter said, no, Dad, you cannot be on TikTok. No. But I have a good idea. She says, no, you can't. So what I would have done, and what I should have done, is there's this guy, Spotty. I should have sent him the lyric and had him do it for me. But so I was going to say, okay, you don't want to hear about my NFTs. Got it. But here's the thing. You made this song and it kicks, getting millions of clicks, blowing up TikTok, blowing up Twitter. But guess what? ByteDance getting rich. If you'd made an NFT, you'd be getting rich and your bags would go to the moon. And so I was going to end it with, so I guess the only screwing that's being done is on Web 2. So
You can sing it if you want. I mean, we all know.
Yeah, but I'm not gonna, because then it would be too close, and you guys would publish it, and it'd be ugly. So my daughter was right. I shouldn't go on TikTok. But I think the point of it is the Pussy Riot then had her come up and they made an NFT. And now she is getting paid. And so the ownership world that we are moving to, which is Web3, where Web2 is just a centralized rent world. And look, slumlords get really rich and the rest of us survive. And it's fine. We have shelter and we have heat and light and, get our food from the grocery store. But an ownership world is better. Like every time you post a picture on Facebook, why should Zuck get paid? Right? Every time I give an opinion on Twitter, which might not be worth anything, why shouldn't people have the ability to reward me or you or anybody else? Why shouldn't we rank? Like if I give an opinion on nutrition, you probably shouldn't listen to it. Okay. If I give an opinion on investing, maybe you want to listen to it. But how about we rank how people contribute instead of just everybody having an equal voice? So we can do so many things in Web3, and we can incentivize good behavior with tokens, and we can get away from this idea that single companies scrape all the wealth. It's just an advantage, and TradFi to DeFi, way better. But guess what? The TradFi guys kind of like it the way it is. And so they're going to fight really hard. And I've been, banging on this a lot, that 2009 to 15 was the first they ignore you phase. Bunch of nerds and geeks playing with your magic internet money. Who cares? 16 to 21, then they laugh at you. Look at those idiots, black t-shirts, I got my black t-shirt on today, I'm trying to be cool. Probably not working, but okay. First, then they laugh at you. 2022 to 2027, then they fight you. The next 5 years are going to suck. It's a technical term. They're going to suck because the incumbents are going to fight, and they're going to fight hard. I just did a show this afternoon where they're talking about, 3 big stories today. They want to legislate stablecoins. No, what you want to legislate is unstable coins like Terra Luna. Okay, scam, bad. Not scam like Ponzi, just dumb, right? If you're going to have a stable coin, a bank, essentially, you can't have an asset liability mismatch. You just can't, because it will have a run and it will disappear. But that's not what you want. You don't want to regulate a stable coin like USDC. That's not unstable. And then Janet Yellen, this Financial Stability Committee, said that is a risk to the financial system. I'm like, bullshit, honey. What is a risk to the financial system is CS and Deutsche Bank, the regulated entities that pay billions of dollars in fines for money laundering every freaking year. You talk about Bitcoin being used for money laundering. Oh my God, seriously? The number one tool for money laundering in the world is the $100 counterfeit bill. That is it, number one, by far. Right? 70% of dollars have traces of cocaine on them. I mean, there's a reason. And Katie Haun, right, venture capitalist, has this great line. She was a prosecutor. Given the choice between Sacco cash and fingers on a keyboard, give me fingers on a keyboard every day, because I got a chance to catch that guy, right? Sacco cash, not catching. So it's the obfuscation by the authority figures to, try to delegitimize what is a legitimate evolution of technology. And look, I get it. They don't want us to go here because it disrupts their monopolies, but that's the way the world works. And every incumbent has tried to stop innovation and disruption through regulation. My favorite example is red flagging. Everyone heard the term red flag. Anyone know where it comes from? No. In turn of the century, or at the turn of the century, they've invented this thing called the horseless carriage. And most of them, by the way, were electric. The first cars in America were electric, not gasoline. So Elon did not invent the electric car, by the way. So the biggest car company in the world in 1903 was the American Electric Vehicle Corp. And the problem is Henry Ford had invented the Model T that was going to run on grain alcohol. And John D. Rockefeller, who was not a nice man, says, Hank, I have this stuff. I make kerosene for lamps, and I have this stuff that I flush down the river, just a waste product. It's called gasoline, but it lights on fire, and like the river's catching on fire and people are getting cancer. And so I'd rather you put it in your car and burn it, and that'll work. So they cut a deal, and that's why we ran on gasoline for all those years. So the horse and buggy owners said, well, we don't want horseless carriages because we got horses and we got buggy whips and it's better. So what'd they do? They paid money to the New York politicians to pass a law called the red flag law, where you had to hire a human being to carry a red flag in front of your car if you drove the car in the city limits. Has anyone ever seen anyone walking in front of a car with a red flag? No, because it was dumb. But it didn't stop them from passing the law and trying to stop the movement away from horse and buggy to horseless carriages. So ultimately, good technology wins. It just takes a while.
Do you think that markets have bottomed, or what chance do you think markets have bottomed versus how are you 2023?
No, again, it's a big question. Look, I do believe that crypto winter ended June 13th. I think the 17.5 wick on Bitcoin was the low. Doesn't mean it's impossible to go lower, but I believe that was the low. And I think we're in crypto spring. Now, crypto spring doesn't mean straight up, right? Straight up is summer. So crypto summer, parabolic, that's probably first quarter next year. So spring is more choppy. It's like, think about spring. It's cold, it's warm, it's windy, it's wet, it's muddy. It's kind of not good, not bad. It's just kind of yuck. So that's what we're kind of in. I think we're gonna have a lot of volatility and a lot of yuck. Good for traders, but most people aren't very good traders, but not a lot of movement up or down. In the equity markets, we're still really expensive. Like stocks, even though they're down, was down 30, now down 25 after the last 2 days, we're still in the 93rd percentile expensive. So stocks could fall a long way and still be overvalued. But if the Fed is going to pivot and is going to stop raising rates, they don't even have to print money, but if they just stop raising rates, we'll have a little bit of a face melter, and that could be good for some people. I think we're in recession. I think we could turn into depression. So I'm not a buyer of equities. I am a buyer of digital assets. I think Bitcoin sells, a third below its fair value. I think fair value is 30,000 and we're selling at 20. So I'm a buyer of that. ETH is tougher for me. I'm not a proof of stake fan. I like the old proof of work. I don't know. Do I think it has momentum, and do I think it's like a toolkit for other developers? Yeah, but here's the problem. There are a whole bunch of ETH killers. Now, none of them have been able to kill ETH to this point, but they're still trying. And you got Solana, and you got Avalanche, and so if you're bigger, better, faster, stronger, and the only thing you could point to before the merge was, well, we're proof of work and you're not, now you're the same. So I don't know. That one I'm struggling with. And I do think it was a buy the rumor, sell the news thing. So 900 to 1700 was the move. And, could we go back to 900? I don't know. But so I want to like ETH because I think it is the future. I think it's a toolkit. But I do think there are other things competing with it. Like I'm a big Avalanche fan and things like that. Then you got a whole bunch of other stuff, which, look, this is probably the wrong channel to talk about this, but I'm not a fan of the dogs. I think they should not exist, right?
We'll talk about it. Yeah.
I literally think they should go to zero. And I said, look, that this bear market would be over when Doge was zero. And it came close, kind of, not really, but it went down a lot. But I just don't see any value. Now there is one Parler, the old alt-right social media site, is thinking about using Doge as a captive currency for Parler, like a decentralized Twitter. And that would piss me off, because then it would actually have a use. And so then it wouldn't go to zero, but then it would be more like a stable coin. So it wouldn't really be tradable. But so I'm just not a big fan of number go up stuff. But any project where you're working toward being better, faster, stronger than traditional tech, I'm a fan of. So, I like what's going on at Polkadot. I like what's going on at Cosmos. I want to like Algorand because they're really, really smart, but I can't quite get there. A lot of people want me to love XRP, and I just can't quite get there. I don't know. I'm open to be convinced, but I'm struggling, guys, with, if you think about the internet, right? There were 80 protocols and we went to 5. Today we basically use 5, right? There's IP at the bottom, and then there's TCP IP that sits on top of that. Then there's FTP for files, SMTP for email, HTTP for websites, and www that kind of ties it all together. So if we're going to go to that world, there's 2 versions. Is it Bitcoin is the base layer, Lightning is the second layer, and then there's an L3 and an L4. But I don't know what the toolkit is for Bitcoin. There just doesn't seem to be a natural toolkit. Or is it a single stack where Bitcoin is the base layer like TCP/IP, Filecoin is like FTP, Ethereum is like the www, and then we duke it out with Avalanche and Solana and Cosmos and Polkadot for the SMTP, HTTP? I don't know. Or are we going to have a multi-chain world with lots of L1s and we bridge across all of them? I don't know. That's the $64 trillion question, and that's why we're all here, and that's why we're all working on this. But I still, in any of those worlds, the reality is the vast majority of the projects, the protocols, went to zero. Just like the vast majority of currencies in the history of the world have gone to zero. So only a few will survive, and trying to figure that out is kind of what it's all about. And that's why I'm probably not a put all your eggs in one basket. I'm probably, spread your bets a little bit, and don't be afraid to take venture capital bets on projects that have venture capital profiles. But remember, pre-seed stage venture capital has about a 98% loss ratio. And the problem I see for people is they put too much in one place. And then if that happens to be the one that goes to zero, then they get wrecked. So why not have a diversified portfolio and spray and not pray, but then as things get traction, double up? The average person wants to double down. They want to prove that they're right. That's a horrible strategy. The market's right. You're wrong. Look, the legends, and I've been blessed. I've had, some mentors in this business that absolutely legends. Julian Robertson, God rest his soul, just passed away. I've spent time with literally all the greats. I mean, I had a great job for years. I got paid to talk to George Soros and Paul Tudor Jones and Stan Druckenmiller and just people I shouldn't even be in the same room with. And if you talk to those people and you analyze those people, the very best of the very best, they're right about 58% of the time. The average person is right about 1 out of 3. Those are bad odds. So it's like going to Vegas, right? If you go to Vegas, you hit the hand big, stop, just leave. You won. But if you keep playing, all the money and then some is going to the house, because the house wins, because the odds are in their favor. And so if you think about investing, knowing that the odds are stacked against you, when something starts to work, there's a reflexivity, as Soros describes it, that it becomes self-fulfilling. So you should probably press that bet. But the average person doesn't want to do that. The average person, as soon as they're up 10%, pulls their flowers and they water their weeds trying to prove they're right. No, pull your weeds, live to fight another day, take your losses fast, and then press those winners. Now, it doesn't mean to go all in on one thing, but continue to rebalance into other new projects, but don't be afraid to just leave stuff that just doesn't work.
Mark Yusko, final question before you let you go. And by the way, links for all your stuff are down below. I encourage our audience to check out your Twitter. I believe a year ago, you predicted that, or you could see Bitcoin in 5 years hitting $250,000. Yep. Reasoning very simple, because you believe it's as valuable as gold. And if the market cap in 10 years gets to gold, that's $500,000. So in 5 years, it should be half of that. Does that still stand true in 5 years, Bitcoin around those levels? And then where would that put these Web3 protocols, just generally speaking, like Avalanche?
Yeah, so it is great. And so technically, I should have to say in 3 years, it could be 250. The problem with the exact number and the exact timing, they say a good economist says what or when, never together. So I absolutely positively believe that Bitcoin is digital gold, right? I don't know if you've seen the movie Knight's Tale, one of my favorites, Heath Ledger.
Yes.
And he wins that first, sword tournament. And he gets that gold calf thing, and Chaucer's off, losing the money, and he has to bail him out. And he literally bangs the thing on the thing and breaks off a piece. Says, "Go do what you do with that," and bail him out. That's a really bad way to divide gold. Like if I had a gold bar and we want to split it 3 ways, first, I couldn't break it into 3 pieces. I couldn't do it. And then stuffing it in my Apple to get it to you, really hard. If I want to send you Bitcoin or anything else, I could do it right now off my phone. Easy. So I think it is a better form of value storage. So I absolutely believe that. Gold, $10 trillion above ground, half of it in jewelry and chalices, that doesn't count. The monetary value of gold, about 5 trillion. So 5 trillion from 400 billion today, that's 10x. 10x from here at 20 is 200K. Round it, because my numbers are off a little bit, to that 250K number. Seems easy to me to get to 250K because you got a few lost or stolen coins. No problem. Timing is harder, but seems absolutely easy to me. Now, the other way to think about it, if you look at the halvings, every halving we add a 0. First halving was 10, second halving was 100, third halving was 1,000, fourth halving was 10,000. So that means the next halving is 100,000. Okay. That's another way to look at it. And ultimately, you think about networks. Networks are valuable because of the participants. So, 1 phone, not valuable, 2 phones, more valuable, more than 2 phones, 10 billion of these babies interconnected, very valuable. So
Metcalfe's law.
Company. Pardon?
Metcalfe's law.
Metcalfe's law, right. So, Sarnoff said, hey, if I transmit radio waves, then it's the number of people that can hear the radio waves is the value of the network. And then Metcalfe came along and said, no, because Aaron and Austin talk, and there's value in that. So it's actually the square of the number of participants in a network. And then Reed came along and said, well, actually, it's even better than that, because within every network, there are sub-networks, and those can grow exponentially as well. But the idea of a network is the more participants, the better. So the longer we go, the more network we have and the more exponential the growth. And that's why when you look at pictures of Bitcoin, it always looks like this. It goes way parabolic and then crash, and then parabolic and then crash. And then but if you zoom out, it actually looks like an S-curve, right? First 10% happened over 10 years. The next 80% is going to happen over the next 10 years, and the last 10% over the next 10 years. So it's a 30-year trend. And that's true of every technological innovation. It's that S-curve. Well, the inverse of the S-curve is the Metcalfe's law parabola. And if you plot on log scale instead of linear scale, you get a beautiful line. And people just can't comprehend exponential growth, right? 20 linear steps, I'm across the library. 20 exponential steps, I high-five you twice because I go around the world twice. So that idea of where are we and when do we get there is challenging, other than the likelihood that this technology goes away, 0, right? It's here. It won, Paul Romer won the Nobel Prize for this, the law of increasing returns. It's not the best technology that wins, the technology that gets critical mass first. And so whether there's something better than Bitcoin, it doesn't matter, because now we live in an open source world. So if you invent something better, they just copy, paste, and append it to the chain. And that's what we did with Taro and SegWit. So we can improve it. It's not like the old MySpace, Facebook days where they were closed systems and you could actually engineer better technology by stealing their secrets and making them better. So now open source, we can't. So I do think that the protocols are kind of set. It doesn't mean that new ideas can't grow, and we'll have new games, and we'll have new systems, and we'll have new incentives, we'll have new applications. But I think the core protocols, for most part, are probably set. So the chance of those going to zero. The chance of them overtaking meaningful parts of economies and financial systems, really high. And I'll just leave you with this, right? Which is, for millennia, the church dominated. and we would go to church once a week, and we would get our information, our news, because most people were illiterate. So you basically were preached at, and they told you what to think, how to think, what the news was, and they had control. And then the printing press busted the monopoly. And suddenly you could print books and you could teach people to read. And suddenly media, okay, books, magazines, papers, television, and state influenced and state owned media replaced religion as the primary source of, get your, your grandparents, my parents would go home 6 o'clock, watch the 6 o'clock news, Walter Cronkite, and he would tell them what to think and how to think and who to believe. Or they'd watch the other channel with Dan Rather. And that was the way it worked. Well, then the internet busted that monopoly wide open. So now those media companies' value shifted to the internet. And so ABC, NBC, CBS used to have all the market cap. Now it's at Netflix. And the local stores used to have all the market cap. Now it's at Amazon. So what blockchain does is it busts the monopoly of financial services. 800 years. It's been an amazing monopoly. Thanks Medici's, thanks Rothschilds, thanks Morgans. It's over. And that terrifies those people. Like talking to Pascal today at Ledger, the idea that everyone will have a ledger and that everyone will be self-sovereign and everyone will have their digital identity, their digital wealth, all the things that they own under their own custody and control, instead of having to pay a bank to do it, it's anathema to the banks. And so, but it's inevitable. Just like it was inevitable that the church would lose their control, like it was inevitable that governments would lose their control. And that's why the governments fought against the media and the internet. So why China still to this day fights against the internet. And at the end of the day, even in China, you can VPN, right? Now you could get arrested for that, but you could still do it. And in the world today, people say, oh, but the government will just ban it. No, they'll make it illegal. They tried to make gold illegal in 1933, and they had to make it legal again in 1975. And you guys know this probably, but it's not a coincidence that Satoshi Nakamoto's birthday is 4575. 45 was the day of Executive Order 6102, and 1975 in 1933, and 1975 is when gold was made legal again. It's not a coincidence that Bitcoin was born, right? The origin block, Genesis block, was during the global financial crisis. Chancellor proves the first bailout for the bank. We almost had another one on Sunday. Maybe we did. And it's not a coincidence. I thought this, Lisa Huff, her daughter came up with this idea, which I think is pretty cool. Everyone else asked, well, why 21 million Bitcoin? Well, 6102, 21 with 6 zeros is 21 million. I'm like, oh, that's awesome. 17-year-old came up with that. I told you, young people do everything great. So,
Mark Yusko, thank you so much for taking the time with us. Where can our audience find you, or just final thoughts?
I'm easy. I'm at Mark Yusko on Twitter if you care. Our website's morgancreekcap.com. I'm pretty good at DM. I suck at email. I'm okay at texting. I probably won't give out my cell phone number. I got SIM swapped twice. By the way, one piece of advice: if you're using your phone number for two-factor authentication, please stop. Use a second email. Never use your phone number because it's so easy to get control of your account. But the first time I got SIM swapped. Now, thankfully, I don't keep anything on my phone, so don't try to SIM swap me. It's all in cold storage or Coinbase, so you can't steal my stuff. But the first guy literally was pissed, I guess, that he couldn't steal my Bitcoin. So he took over my Twitter account for like a week. And he's tweeting all these crazy rap lyrics and stuff. And people are like, Mark, have you lost your mind? I'm like, it's not me. I can't get it back. I did finally get it back with some help from someone who used to work at Twitter who got me all the way to Jack, and he fixed it for me. So thank you. The second time, they were good. This time it was more professional. The first one was just a guy in Atlanta that paid somebody at a GameStop to get my number. The second time, this is crazy. I called AT&T and I said, I don't want you to ever give a SIM card. I will never ask you for a SIM card. Please put a line in my account that you won't give a SIM. We can't do that, sir. Like, why not? I'm telling you to do it. So, nope, can't do that. Like, how about I will only come to this store? Nope, can't do that. Like, how about you take a picture of my ID with my face, and so you know what I look like? Nope, can't do that. I'm like, well, what can you do? Well, we could have a PIN. We could have an 8-digit PIN. Okay, let's do that. So I give him my PIN. I get SIM swapped again. I call up, what the hell? Oh, it looks like the PIN was overridden. I'm like, so you're telling me that it was someone inside AT&T that did this? No, sir, that's not what I'm saying. I'm like, that's exactly what you're saying. And the guy actually won his lawsuit for 22 million bucks. He did lose a bunch of money on that. So that was a long ramble about don't use your phone number for two-factor authentication. But closing thoughts, look, we've already won. First, they ignored us. Then they laughed at us. Now they're fighting us, but we've already won. The fact that we're here, the fact that we're talking about digital assets, the fact that this is the greatest migration of talent I've ever seen in my life. And I've seen a bunch of them, right? I got white hair to prove it. I've been around a long time. And the internet movement was amazing. The kids coming into the internet were unbelievable. In the mobile net, unbelievable. This is better. And in fact, I gave a speech right before we locked down and at the end of 19 up at the Digital Asset Summit in New York. And I gave this speech, kind of said the same thing. I said, look, you, people listening, you in the audience are the reason that I'm so excited. The reason I get up out of bed excited every day. I'm having more fun than I've had my whole career. And I love my career, but I'm having more fun talking to people like you. And it's because of you. It's because the quality of the people is so high. And this guy said, would you call my mom? Like, what? She says, she thinks I'm an idiot. I left this big law firm to go work at this. I'm like, yeah, let's call your mom. So we called his mom, said, no, he's not an idiot. He's a really smart guy. And she was happy. So I will call your moms if you need me to say that all of y'all in this space, it is the future. The future is really, really bright. It is unbelievable. It's the greatest wealth creation opportunity I'll see in my lifetime for sure. And I'm having a great time every day. So thanks for having me.
And that young man whose mom you called turned out to be Pompliano.
That's
just kidding.
Funny. It wasn't Pomp, but it probably should have been Pomp. Actually, probably should have been Jason's mom, but he needs more help.
Cool. Thanks so much for coming on, Mark.
Yeah. Thanks for having me, guys.